is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials down 76. You get the NASDAQ off 27. S&Ps are off 9.5. We have gold down 440 at 1088. The bonds, 30-year bond just wants higher price, folks. It's going to be amazing. This bond, 30-year bond, looks like it's got an ABC structure on the way up, which is a mind blower. King Dollar. King Dollar's up 603 ticks, trading out at the 97.68 area. And, we'll see whether this fails at the swing point. It certainly doesn't have the juice as it's going up into that area. Now, inside the Dow Industrials, what's the strength versus the weakness? This is what you have. The strength, United Technologies is up 87 cents. Intel is up 19. You get Chevron up 24, and Merck is up 12. The weakness, Procter & Gamble is down 319. That's getting taken to the cleaners. You get United Health down 128. Boeing is off 135, and Apple is down 105. If we go over and we take a look at, let's put Procter & Gamble up here, PG. Because I believe PG is going to be taking a B point out of an ABC structure on the way down. Let's take a look at this baby. Yeah, it certainly is. So check this out. Okay, we take this, put this in on a daily. This is going to be trouble in paradise here. Daily. There she is. So Procter & Gamble right now is down 3. She's going after that swing low. Okay. Procter & Gamble, we're at 77.40. Down $3. The swing low is 77.10. We've hit 77.15. We've done it with 5.9 million. And all this needs is about 11 million to basically be a very large ABC structure on the way down. Procter & Gamble evidently is having a hard time selling some product out here because we've just gone from a price point of 93 to 77. You bring this back and we're trading. Is Procter & Gamble going to get in the lower range? Yeah, it's not in the lower range yet. So I'm going to put this on a monthly. What you're going to see, man, a lot of these stocks have made their way. Procter & Gamble, this is pretty amazing, actually. Well, I guess it's the dividend stock. Procter & Gamble is trading where it was trading in 2007. You know, the high of 2007 was 75.18. It had broken out of that area. It broke out January of 2013. Now you're breaking back into that area. So that's problematic for Procter & Gamble. The NDX 100. What do we have with the NDX 100? Okay, so the NDX 100, we're down 29 bucks. The winners that are pushing the NDX higher is Western Digital. That's a dead cat bounce, but it's a 10% dead cat bounce. It's up 8.29 at 87. Wynn Resorts, also dead cat bounce. That's up 5.94 at 101. NXPI is just up. That's up 386. And Mondelez is up 168. Now, taking it south, you have Whole Foods is the number one. That's down 491. Automatic Data is off 349 at 78. And you get Facebook down 363, trading out at 93.49. Now, if we pull up Facebook, I just canceled that, didn't I? Okay. We pull up Facebook. Let's go over here. There she is. Okay, so we have with Facebook is this. You know, huge run, no doubt. You get a couple gaps that want to get filled. The top of the first gap is 90.86. We've hit 91.80. We're hitting that, however, with 7.2 million, and that's way too much volume. So that's saying that Facebook is going to come down lower, number one, and more than likely basically take that area out. The Whole Foods, which is putting pressure on the NDX 100, that is down 487. That little baby is a monster ABC structure on the way down, and this looks like it's going to take just about everything out. Whole Foods, I guess competition-wise, has got a huge problem here. Okay, so the last high-volume swing low on Whole Foods is $37 on a weekly basis. It's blowing this away right now. What that sets up, man, this is a trip. So what that sets up, look at this. We go all the way over to, well, it's not the end of the world, $30. $30, you go back to 2011. That's the way that that setup is right now. We take a look at the E-minis. What do we have happening inside the E-minis? They, right now, basically sideways move. You know, you're down $9, but guess what? You know, we went up 10 or 11 yesterday. So at this point, you get a sideways move in them. The characteristic, the volume characteristic inside of these, let's see what we have. Oh, yeah, this is sweet. Okay, so you lunge down at 940 has volume. So these lows of today are going to be tested, maybe taken out. That's 2085. That's how that baby is set up right now. We take a look at that correlation inside the SPY. More than likely you're going to see this. Yeah, it's the same correlation. The SPY itself is basically saying it's going to get down there before the S&Ps do. The NQs. So if we take a look at the NASDAQ futures, what do we have with the NASDAQ futures? NASDAQ futures are the weakest. They're down 19 right now at 4549. And those babies, that not only, let's see. This is interesting. So the NQs don't have the high volume spike. The high volume spike actually was already tested. That was at 45.39. So how this bounce correlates right now is going to be important inside the NQs. That's on your intraday basis. On the daily basis thus far, right now we're at the 45.48, and anything inside the 45.50 area is in the lower range. Our phone number is 877-927-6648. Some of the high volume stocks in this market. You have Facebook down 396. Whole Foods is off 477. Procter & Gamble's down 322. Whiting Petroleum is down 170. You have Holly Frontier up 127. Dow stocks, what do we have inside the Dow? You have Big Blue down 36. Walmart's down 12. Boeing's down 142. Let's go look at the oil market. So oil, XOM rather. Yeah, they might be getting some traction here. This is going to get interesting. Okay, so ExxonMobil, you get it's definitely got a little bounce going. I mean, it's been a one-way trip on the way down. She looks like she wants to go up higher, 85.96 in her 82. CVX, Chevron, the same type of setup here. The XLE, we take a look at the XLE. What do we have inside the XLE? Same type of deal. The XLF, what do we have with the financials? Financials out here, they're trying to get over the high of yesterday, and they don't have the juice just yet. Yesterday we did 26 million. You're coming into 56 million. So they, no doubt, are going to need a lot more volume to get up and over. Overseas last night, what you had, folks, is that Shanghai went south again. You had Shanghai down 2.2, and the Shenzhen was down 3.2. Bottom line is that that Chinese market looks like it's going to be a monster ABC structure on the way down. What we have had in Europe was up this morning prior to our open, and Europe has been selling it off. The DAX right now is trading at, the DAX had hit a high today of 313. Right now you're at 152. The FTSE in Germany had, this is going to be a big ABC down. Interesting. The FTSE had hit the 697 area. You're at 649 right now. That is giving it up and giving it up across the board. It's kind of interesting, that type of selling. Our own markets, they open down. You get a small bounce that's happening right now, and we'll see where that can shake out. Gold market, what do we have with gold? Let's go over to Rheingold Resources. We take a look at Rheingold. This good setup. Here we go. Okay. Well, you have, let's see. So we got a sign of strength that came in the 24th. 24th, and just about all the gold stocks had a decent sign of strength. You back down at lighter volume. You push higher yesterday, and now this is rejected lower price out here today with lighter volume. Not a bad setup. Let me go look at Gold Corp, because Gold Corp was having some big problems. Yeah, Gold Corp hasn't happened yet. It's hanging at the bottom, hasn't happened yet. Anico Eagle AEM. Oh, this is good. Okay, so at 8 a.m., they got under the lows of the 24th, which was under 21.87. You got 21.40, and you're not going to get the juice probably. And it's rejected that lower price. That area, too, by the way, is going into, when you see this with AEM, this is what gets intriguing about AEM. That area was going into your October 08 swing area. That low is 20.87. On the monthly basis, that's 132 million. And thus far, we've done 55 million. And you can see, I believe, is today the end of the month? It's either today or tomorrow, right? 30 days of October and November. Yeah, so we're right at the end of the month. The bottom line is that what we will see after the close out here today, exactly what type of volume characteristics we have inside all those markets. Apple, we go take a look at Apple. You know, Apple's had the sideways movement going on for quite a while. It's slowly making a way down to the high volume swing point, which was generated on the 9th of July. That high volume swing is 119.22. And because Apple, of course, is such a large weighting inside the S&P as well as the NDX 100, that in itself is going to keep selling pressure inside that the QQQ and the NDX. You got to remember something, folks. It's the chicken or the egg. When the NDX goes down, the Qs go down, they got to sell the stocks. When the stocks go down, they got to sell, on a big weighting structure, they got to sell some of the Qs in order to keep the net asset value even. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Down 74. Nasdaq's up 22. S&Ps are off 8.5. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You know what's cool? taking something that's good for you, something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. We have the Dow off 70, Nasdaq's down 20, S&Ps are off 8.5. Let's go to Lou in Nashville. Hey, Lou, what's going on?
Hey, what's happening, Tom?
How you been?
Not bad.
Yeah?
Hanging in there, yeah.
That's a beautiful thing. So, how's the summer going?
Not bad.
That's
Not
good.
bad. Decent weather.
That's good to hear, man.
Yeah. Hey, I was wondering if it's too late to short the S&P.
No, not even close either. I mean, how are you going to short it? What vehicle are you going to use?
The triple X.
Okay, so let's take a look at it. Then what we're going to do is that we're going to look at the SPY, all right? And then you can just do that correlation so you can figure out where you would put your stop and what you're looking for, right? So right now you're at 209.90, and the way that I do this right now, there's no reason to basically put a stop above the 213. Okay, that's the high that was generated out there on the 20th. What I would do is this: I would put it right above the high of the 23rd, which you're only giving this thing. Well, that to be 209.95, so you're putting it above 211.65. And let me show you why. So if we put this on a daily, folks, what you're going to see is this. When you look at highs and lows, okay, bottom line is that they always love busting highs and lows. If this thing's going to come down, where the problem lies is at the 210.80 level. And what that level's all about, 210.80. What that level's all about is where this traded on March 6th, which was a big down day, as well as March 25th, which is a huge down day, as well as June 29th. That's the levels, and then last Friday. Those levels right there, that's where there's a monster seller. So I suspect when you see something like this and it's over a longer period of time, you don't have to put a stop at a high. You just put it. What we're doing is that we're putting it right. That high, the high that I'm talking about is 210.37, and so I'd say, listen, 211.65, you get some action. So if you're going to go to the SPXS, which is the direction triple, what you want to remember is that these are daily vehicles. That's the bottom line. That correlation, the way I do it, I would take the S&P, you take what that number was, meaning it looks like it was $1.50, and you take that percentage-wise, and then you're going to do 3 times that for the SPX. And you have to adjust those, but the SPX looks to me like you're trading at 1769, and that swing point up there is 1935 is game, and the real key is going to be, okay, do we get any juice inside this market? What you could do, one of the things that I suspect, you could wait for is to see today if, in fact, the NDX 100 gets volume in it on the way down. I expect we're going to stay down. But if we don't get volume, meaning you don't get an expansion of volume in the NDX 100, your probability goes higher that we're going to go after the highs again. So,
I see. Right.
So when I really think about it, I would wait to the end of the day because because the Qs, folks, have a chance to do an ABC down. If they don't, you're going into Friday and Monday, we're going into window dressing. What that sets up is that sets up another run to the highs.
I see. Okay.
Cooking, brother.
That's mine. Thank you.
Okay, man. Have a great one. Have a safe one. Nice to know New England's getting some good weather, too, man. That winter was getting buried up there. There's no doubt about it. We go take a look at the... Whoops. How did that just... I don't know where the heck... Is there someone still on the phone now? Okay, sorry. My IM is disappearing here somewhere. So let's go over to that gold contract. You know, gold, folks, no doubt has been pushing lower. The juice, GCZ, we're on the next contract too, by the way. We're on the December contract right now. We take a look at this December contract. We got down to 81. You're at 92 right now, and you still had lighter volume. You know, you get a rejection here, man. This is nice. You know, this is the, 5, 10. Can't push it again tomorrow? Maybe. We'll see, though. This is Tom O'Brien. This is TFNN. Dow right now is down 63. Nasdaq's off 20. S&Ps are off 7. Gold's down $110. We're going to be right back.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. Let's go take a look. There she is. Okay, so right now we have the, you just got a nice little bounce. The Dow is actually only down 40 when the beginning of this break was coming into. We're down 54. You get the NASDAQ off 18. S&Ps are off 7.5. And if we go take a look at the transport. So the transports, folks, were the first large indice to get into lower price. What you do have is that the transports have a bounce, a good bounce going. The last 2 days they came off that bottom, had some good juice. Now, what the transports had also done is that they went into the highs of the October 2014 level. Now, inside the transports, it's the truckers right now that basically are doing well, you know, which is pretty interesting, you know. So we'll see where that thing lies out, meaning is this just a dead cat bounce, or is there some strength inside the transports? The airlines still don't have it, you know, but the trucking business does, and that may have to do with the aspect of just that gasoline has gone down so dramatically. The Federal Reserve, bottom line is that it seems that the Federal Reserve is giving the market each and every opportunity to basically get adjusted to slightly higher rates. That being said, what you do have inside that market is that the short-term rates and the long-term rates from supply and demand are still saying they want higher price. Copper market. Let's go over to the copper market. See, because it looks to me, and this is where it's, man, there's so many divergences in this market right now. Copper, folks, looks to me like it's already bottomed. And I know that is basically counterintuitive as to what is happening with China, but it really isn't, because copper just went from 249 down to 238. I mean, 295 to 238. When this got smoked at the lows, it got smoked in an extraordinary way on the 7th and 8th of February, July rather, and it did it with volume. Then it got underneath that, and now copper basically looks like it's building cars to get into higher price. A couple of the copper equities have shown some real strength. They had pulled back. They actually didn't even break their lowest swing point on the pullback, which in itself is a miracle because of the way that everything else has got toasted and roasted. So what's going to be intriguing is that the base metal business, is that coming off the bottom first? You know, we'll see where this shakes out, because there's no doubt that China is the biggest animal in the world, eating the most amount of resources. And, you know, bottom line, China doesn't grow, copper's not going to grow. We go take a look at another base metal stock, iron ore, Valley. Valley's starting to basically pick up, a little price point. We'll see whether it can get any juice going. It's rejecting higher price out here today, but it's going to have volume once again. And the first time it had a sign of strength was back on the 13th of July. And this is a stock that, basically has been decimated. The highs out there were 49, 42. You're down to $2. So we'll see whether that can get any juice going. One of the problems in that equity, of course, just has to do with the amount of corruption that has gone on in Brazil, and it looks like there's going to be a little bit more. So iron ore, though, bottom line is that the world does need iron ore, and what we just did the last couple days, if we go look at U.S. Steel just came off the bottom with some strength, and this stock also has been decimated. I mean, in a huge way, too, not in a small way. U.S. Steel was trading at 196 in 2008, never came back. Went from 196, down to 16, did a counter trend bounce up to 70, went back down to 16 again, and just did another counter trend bounce up to 46. The way this is trading now, however, though, it's like, okay, man, what happens with these steel companies, folks, if you get these things right, the bounce on these steel companies are absolutely huge. And it has to do with the commodity deal. There's no doubt, because what ends up happening, of course, if you're buying the product, and steel is iron ore. That's, product's cheap, which it is right now. Guess what? Steel companies can make money. As the product goes up, the demand will go up. They can make money for a certain amount of time, and then all of a sudden, no more money. What is intriguing out here this morning is that when you actually look at the NDX 100, what you did have is that you had automatic data. Is it automatic data going south? That looked to me, and what that's all about, of course, is payrolls. Now, the payroll numbers have been going up for quite some time. Equity markets, though, right? And once we've achieved a level right now, now it's like, okay, what are you doing for me? That's what equity markets are saying. And it's, of course, always harder when you've already had the expansion of jobs, you've had the reduction of unemployment, ADP. That's what I'm. Let me pull this up right now. Yeah. So automatic data. Now watch this. ADP. This is pretty cool. Watching how this shakes out. So this baby has gone from 90 to 79, and when you look back on it, it's like, man, this is interesting. Okay. If the economy is going to keep going, bottom line, this should keep going. Well, it's had quite a run. It's gone from 39 to 90, and from 2010 to where we are, to 3 months ago. Now you get a pullback. That's a normal pullback, more than likely in something that may want to go higher. But what that also is that is the market in general saying, okay, how can you grow now? That's what the market wants to know. How can you grow? And that's what they want to know with Facebook, by the way. And it's not that Facebook's only down a couple dollars, down $4. What is going on with Facebook, however, is that the engagement of their listeners, that's where that just pulled back a little. We'll see whether that wants a larger pullback. On the daily basis, bottom line, it wants to fill the gap. On a monthly basis, however, you can get yourself a decent pullback on Facebook. And Facebook's been a one-way trade. On a monthly basis, it's not that much either. It's only $81, big deal. You're at 93 right now, so that's not the end of the world. We go take a look at Amazon. Amazon is trying to fill that gap, and this is going to be, if you're in Amazon, bottom line, cover yourself, because what you have, Amazon's just teetering, wanting to fill this gap. Amazon had gapped up on their earnings, monster earnings, right? It closed at 475 on the 23rd. Next day, it opens at 580, but it closes at 530. It's hanging right there. In fact, it's $3 underneath it. That's saying that Amazon is going to probably fill up that gap. Now, when's it going to fill it? Sooner rather than later. $15, $20 gaps, folks, do not stay opened. They just don't stay open. Let's go over and take a look at the actual oil market. What was intriguing out here when you take a look at the drawdown yesterday in oil was substantial. That being said, however, what you did have is that when you look at the drill rig count went up dramatically. So what's going on there is that folks that are in that business want to stay in that business. And what that's all about, folks, is this. So picture. The amount of bonds that are out there inside the oil business are phenomenal. It's huge, folks, okay? So you got to pay your bills. The way that you pay your bills on a cash flow basis is that you don't want to lose money every single day, but you have a choice. Do I lose money every single day and I'm going to put off paying someone else and pay the bond structure so that I don't have to BK? That's what's going on. There's an analyst on CNBC this morning, Smart. It was really intriguing listening. He wasn't saying what I'm saying right now, but he was talking about the rig count going up and saying specifically that, hey, these guys they need cash. Well, they need cash because there's so many bonds out there that have to be paid. And if the bond isn't paid, that's the only way that they can go south very quickly. So what do you do? You pump cash flow, pay that off, and what you're hoping is that in between now and 6 weeks or 8 weeks or 10 weeks, as far as they can stretch out, that price goes up incrementally so that you can play catch up on the other side. But those rigs are going up, and they will go up because the amount of, when I pull up the amount of bonds that are coming, they're not coming due. They have to just be paid interest on. It's huge. I mean, they borrowed a lot of money. That's the bottom line. They borrowed a lot of money. Silver. Let's go take a look at the silver market. She goes. So right now, where are you, silver? How did I just do this? There she is. Okay. SIU5. Okay, silver right now is trading at 473. Okay, not bad. We've done 22,000 contracts. Okay, so with silver, your downdraft in silver was a week before gold. It was the 7th, July 7th. That thing got, went from 1570 down to 1460. Bounces up to 1590. Pull this back a little. And then what you had is that it got under the downdraft, had lighter volume. Now you're staying above the downdraft by about 10 cents. So same type of setup, meaning you do need wide price spread, accelerated volume to show strength coming off that bottom. We're showing that you have no sellers, but we're also showing that thus far there's no buyers. We're coming into Friday tomorrow, and that no doubt is always a challenging time inside the metals market in general. What we also do have is that you get window dressing today, tomorrow, next Monday and Tuesday. We'll see where that shakes out. Inside the Qs right now, we got 6.4 million. That's light volume, by the way. The SPYs right now, you have, 26 million. That's light volume. The small caps, we have 10 million. So the indices, 200 million on the NYSE, and on the NASDAQ, 543. Okay, so when I just went through those, every ETF structure had light volume. The NYSE had light volume. However, the NASDAQ composite had big volume. So that's going to be interesting watching that shake out. But on the whole, what you have here is that you're pulling back with lighter volume, and you pull back with lighter volume, all that would do is set up a run into higher price tomorrow. Now, it's still early in the day. There's no doubt about that. So we'll see what type of juice comes in and what type of surprises if they do come in inside this market. The NASDAQ composite has shown that there's huge selling, and it's on a continual basis. There's no doubt that inside the NASDAQ, they are pushing some big numbers out. The NASDAQ has been pushing 2 billion, 2.1 billion just about every day. Us pushing over 500 million right now in the first hour and a half, hour and 45 minutes of trading, that's a big number. So someone is unloading inside the NASDAQ, and you're still at highs. You know, when you're inside this NASDAQ, you're definitely still at highs. There's no two ways about that. Let's go look at WDC. Now, WDC is up 10%. Gapped off its low. Low there was 75. You're up at it's 86 right now. This is an equity that was on a one-way trip. Yeah, from 114 down to 86. Thus far, that's the sign of strength. You know, so it depends. It depends even on the weekly and the monthly. So it depends on how we back into that level. Meaning, I'd wait for the retracement to take place and see where that whole thing shakes out. Now, as you come over to our website, folks, at TFNN, you're going to see right on the front, right on the carousel, I'm going to be doing a free webinar. Now, that webinar, folks, okay, we really piled this baby on. This is pretty cool. So you can test drive Market Insights, my daily newsletter. You test drive that for a month. What you end up getting with that is that you're going to be into the Tiger's Den for a month. I'm going to be doing a workshop, and that workshop is going to be 6 trades for September. Check it out on the front page of TFNN. It's Tom O'Brien. This is TFNN. Coming right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow right now is down 57. The Nasdaq's off 18. S&Ps are off 7.5. And let's go over to this oil market and take a look at oil. Okay, so CRB. Crude oil right now, we are at 49.03. This little baby, put this on a daily. Okay, CLU5. So, this is what we're setting up here. When we broke, one of our targets wants to just know, we looking for this still going down, number one, to the lows of 42, I expect, or is it that ABC structure down to 35? So check this out. When we, the A point on this is the 62 area, up at February. June 24th, sorry, June 24th. So that's 62.50. Your B is out there at 50. So you get $12 there. $12 off the 54 gives you 40. Down here, thus far, we've hit 46.68. Now, so that's and you broke the B point, you did it with volume. Okay, so that's $40 oil. Now, let's put this on a continuous contract. On a continuous contract, what we're looking at is the last low that was established out here. It's hard to believe it was only in March of 2015. The high of that is 45, the low is 42. Bottom line, there's nothing really to hold this up at this particular point, even when we take a look at where we are in the structure. We put this on a weekly basis, and it also is saying that, listen, it wants to get out of the bottom of this range that we've been trading in. When you put that together, and we put together the amount of the rig count that is going up, and I put that together with the amount of bonds that are out there that have to be paid, that's saying that more is going to get pushed out. You see, the cool thing here, folks, is this. So picture this. What you want to wrap your head around is if you have cash flow, folks, you can mostly get out of anything, as long as you keep going. That's what these oil companies are going to try to do, the smaller oil companies. They're going to basically push oil out until oil gets to a higher price, And in between that, yes, they're going to lose money in between that. But I suspect, all in all, it'll probably save, some percentage of them. I don't know what percentage it would save of them, but it will save some percentage of them. And the key is that the first ones that are out of the gate doing that have the cash. So you have a choice. So picture you own an oil well. You have a choice. Oil's at $42. Let's say it costs you $45. Let's say it costs you $41. If it costs you $41, you're going to do it. It's not even close, okay? Bottom line, we're at $49. Cost you $50, are you going to do it? You're going to do it if you have bills to be paid. If it costs you $55, are you going to do it? Maybe. You start talking 60, 65 and all that, you'll definitely do it. And the reason you'll definitely do it at the higher end, and this is the scariest part about it, is that those companies know that they're in trouble anyway. So what they will do is that they will be the culprits. They will be the first ones out there knowing that they're toast anyway. So if I'm going to be toast, I might as well really push this baby out, and hopefully the oil market will come back. So what does that mean? Huge supply, not enough demand. This is Tom O'Brien. This is TFNN. You stay right there, folks. Got a lot of great programming coming up for you. Dow down 74. Nasdaq's off 23. S&P's off 9.5. Have a great one. Have a safe one, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.